You can make it 4 straight days of gains now for the Dow Jones Industrial Average as optimism remains over the upcoming trade talks. But a decline in technology shares kept a lid on gains in the broader market. The Dow rose just 38 points today. NASDAQ dropped by 15. The S&P was essentially flat. Mike Santoli gives us his current view of the market.
The stock market finds itself back in a familiar place, but with a somewhat different view this time around. After climbing above its choppy August trading range last week, the S&P 500 has returned to its level from July 31st, and before that, at the start of the same month. Yet since that point, both interest rates and investor sentiment have moved quite a bit. In late July, the 10-year Treasury yield was above 2%. It is now around 1.6% after plunging under 1.5 in recent weeks as recession fears flared. All else being equal, lower yields are good for stocks, so long as the economy isn't entering a recession, which helps explain the market's recent 5% bounce from August lows. And the global rush for safe bonds and the heated trade war volleys between the U.S. and China have worn on investor psychology far more than the 6% pullback in the S&P last month would suggest. This, too, is a potential positive for stocks, as investor pessimism, evident in surveys and heavy withdrawals from stock funds, often gives way to relief rallies. Now, for sure, stocks on their own are not particularly cheap. And in fact, last year's fourth quarter collapse started with the S&P at a similar valuation to what we're seeing right now. But with U.S. economic data holding up better than feared and the U.S. Federal Reserve poised to cut rates again this month, there is a chance that bond yields and investors' belief in stocks overshot to the downside in August. Now, this doesn't mean the volatility is over, but perhaps Wall Street is a bit better prepared now for the next jolt, wherever it might come from. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.